Welcome to LexTalks, Legal Topics Simplified, where clarity meets curiosity in law.
I like that.
Today we're diving deep into the Reserve Bank of India, powers and functions.
Okay.
A topic that's not just textbook stuff,
Right.
but a living, breathing force shaping India's financial landscape.
Absolutely.
You know what's really fascinating about the RBI?
What's that?
It's how its role evolved from the pre-nationalization era.
Oh, yeah. Back then, the Indian banking system was a bit like the Wild West, wouldn't you say?
Definitely. I can only imagine the struggles they faced.
Oh, yeah.
With limited capital, practically no regulations.
Right.
And, well, very few people even had access to banking services.
Exactly. And from that chaos emerged the need for a strong regulatory body.
Yeah.
Enter the Banking Regulation Act of 1949.
Okay.
This act initially focused on banking companies and later expanded to cooperative banks in 1965.
So this act basically laid the foundation for the RBI's powers as we know them today.
It did.
Can you break down these powers for us? What gives the RBI such a strong grip on every bank in India?
Think of it this way. The RBI holds the keys to the kingdom. No bank can operate in India without a license from them.
Uh-huh.
And getting that license isn't a cakewalk. The RBI conducts thorough inspections, both on-site and off-site.
Okay.
They're making sure banks are playing by the rules and keeping the system stable.
So it's not just about granting licenses.
No.
The RBI is also keeping a watchful eye on how banks operate even after they're up and running.
Absolutely. They're constantly monitoring to safeguard the integrity of the entire system.
I see.
And remember those low capital reserves that plagued banks before nationalization? Well, the RBI tackles that head on by setting minimum capital requirements. It's like building a strong foundation for a house.
So they're ensuring that banks have a solid financial base.
Yes.
Does the location of a bank or its branch network affect these capital requirements?
You bet it does. The capital requirements can vary significantly depending on where a bank is located and how many branches it has. For example, a bank with branches in multiple states will have higher requirements compared to a bank operating solely within one state.
It sounds like the RBI takes a very tailored approach to regulation, considering the specific circumstances of each bank.
They do, and it goes beyond just capital. The RBI also has a say in the appointment of bank boards and management.
Okay.
They're influencing the leadership of these institutions to ensure competent and qualified individuals are at the helm.
So they're shaping the leadership landscape of the banking sector as well. That's pretty significant power.
It is, and it doesn't stop there. They even dictate the qualifications for board members. Think finance, law, agriculture. You need a diverse range of expertise to run a bank effectively.
Agriculture. That's an interesting one. I wouldn't have immediately connected that to banking.
Well, think about the importance of agricultural loans in our country. It's a major sector, and the RBI wants to ensure banks understand its nuances.
That makes a lot of sense. So we've covered licensing, supervision, and capital requirements. What other powers does the RBI wield?
Let's talk about advances. The RBI actually has the power to determine the lending policies of banks. They influence who gets loans and under what terms.
So they're not just passively observing. They're actively shaping how banks lend money.
Exactly. They can even restrict the types of businesses banks can engage in, preventing them from dealing in goods or forming certain subsidiary companies without their permission. It's all about maintaining focus and preventing conflicts of interest.
It sounds like they're really trying to steer the banking sector in a direction that benefits the economy as a whole.
That's the overarching goal. And let's not forget their role in mergers and liquidations. The RBI steps in to safeguard depositors' interests and ensure a smooth transition during these potentially turbulent processes.
So they're acting as a sort of guardian for the entire system, protecting it from instability.
Precisely. And their authority goes beyond just commercial banks. They also regulate and supervise other financial institutions like development financial institutions, DFIs, and non-banking financial companies, NBFCs.
So it's really about overseeing the entire financial landscape, not just banks in the narrowest sense.
Exactly. They're the overarching authority ensuring stability and responsible conduct across the board.
That's quite a mandate. I'm starting to see how the RBI's reach extends into so many corners of our financial system.
It really does. And to enforce that mandate, the Banking Regulation Act has teeth. It includes provisions for punishing those who violate its rules.
Okay, now you've got my attention. What kind of penalties are we talking about?
Well, let's just say they're not messing around. Misrepresenting facts can land you in jail for up to 3 years and with a hefty fine of up to 1 crore. Failing to produce documents during an inspection That's a fine of up to 20 lakh.
Wow, that's serious. I guess that sends a clear message that the RBI means business.
Absolutely. And if a bank is caught illegally accepting deposits, the directors can be held liable for a fine twice the amount of those deposits. It's about accountability and deterring reckless behavior.
So the RBI isn't just setting the rules. They're also making sure those rules are followed with some serious consequences for those who step out of line.
Exactly. It's a powerful mechanism for ensuring the stability and integrity of our financial system.
This has been incredibly insightful. We've covered a lot of ground in understanding the breadth of the RBI's powers. But I'm curious, how do these powers actually play out in the real world? How do we as individuals experience the RBI's influence in our daily lives?
That's a great question, and the answer might surprise you. Think about the last time you interacted with your bank,
Okay.
whether it was for a loan, a deposit, or even just a simple ATM withdrawal. The RBI's regulations are working behind the scenes to protect you and ensure the smooth functioning of the entire system.
So it's like an invisible hand guiding the financial world around us, ensuring fairness, transparency, and stability.
Precisely. The RBI's influence is subtle, yet pervasive. It's there to protect your interests and promote a healthy financial ecosystem.
This is all really starting to come together, but there's one thing I'm particularly curious about. With the recent trend toward privatization of public sector banks in India, how might that impact the RBI's role? Could it potentially diminish their control?
That's a complex and fascinating question. Privatization definitely raises some interesting legal and regulatory considerations. It's a topic that deserves its own deep dive.
And that's exactly what we'll be doing in the next part of our discussion. We'll unpack the potential implications of privatization on the RBI's powers and functions. So stay tuned.
You know, it's interesting how the Banking Regulation Act doesn't just outline the RBI's powers.
Hmm.
It also sets clear boundaries for what banking companies themselves can and cannot do.
Well, that's intriguing. So it's a two-way street. The RBI has its authority, and the banks have limitations on their actions.
Precisely. For instance, did you know that banks in India can't simply trade goods like a regular business?
Really? That's surprising. Why not? I mean, wouldn't that be another avenue for them to generate revenue?
It might seem that way, but the Act specifically prohibits banks from directly or indirectly engaging in buying, selling, or bartering goods.
Okay.
There are a few exceptions, of course,
Right.
like when they need to sell assets they've received as security for a loan. But for the most part, banks are restricted from operating as conventional trading entities.
That makes sense. It's about keeping their focus on financial services and preventing potential conflicts of interest. Imagine walking into your bank and being bombarded with offers for appliances or cars.
Exactly. It would be quite a departure from what we expect from a banking institution.
So are there any other limitations placed on banking companies?
There are quite a few, actually. For example, the Act delves into the qualifications of individuals who can be involved in a bank's management. A bank can't employ someone who has been declared insolvent or someone whose compensation is directly tied to the bank's profits.
Those restrictions seem to be aimed at promoting responsible and ethical management practices.
Absolutely. It's about ensuring that the individuals running these institutions have a vested interest in the bank's long-term health and stability, not just short-term gains.
It sounds like the Act is very thorough in addressing potential conflicts of interest and promoting sound management practices.
It is, and it goes even deeper than that. The Act even outlines the composition of bank boards, mandating that at least 51% of the board members must possess professional expertise in specific fields.
Like what?
Think accountancy, agriculture, rural economy, banking, cooperation, economics, finance, law, small-scale industry, and so on. It's a pretty diverse range of expertise required.
Wow, that's quite a list. It seems like the RBI recognizes the importance of having a well-rounded and experienced board to oversee a bank's operations.
They do. It reflects the understanding that banks play a critical role in various sectors of the economy. And having board members with diverse expertise helps ensure that a bank is well equipped to navigate the complexities of those sectors.
It also highlights the importance of legal expertise in banking operations, which is encouraging for us aspiring lawyers.
Right. Legal knowledge is essential for navigating the regulatory landscape and ensuring compliance with the Banking Regulation Act. Speaking of which, let's circle back to those capital requirements we touched upon earlier. You mentioned they vary based on a bank's location and branch network. Could you elaborate on that?
Absolutely. The Act gets very specific about the minimum paid-up capital and reserve requirements for different types of banks. For instance, a banking company incorporated outside India needs a minimum paid-up capital of 15 lakhs.
Okay.
But if it operates in Calcutta or Bombay, that requirement jumps to 20 lakhs.
So the location and scale of operations definitely play a role in determining the capital requirements.
They do. And for banks incorporated in India, the requirements are linked to their branch network. If a bank has branches in multiple states, it needs a paid-up capital of 5 lakhs. But if all its branches are within a single state, excluding Bombay or Calcutta, the requirement is reduced to 1 lakh plus 10,000 for every branch in the same district as its principal place of business, and 25,000 for each branch in other districts within the same state.
It sounds like the RBI has carefully crafted these requirements to match the specific circumstances of each bank.
They have, and it doesn't stop there. The Act also places restrictions on subsidiary companies. A banking company can't just form a subsidiary for any purpose it desires. It needs to be a purpose specifically mentioned in the Act, or obtain written permission from the RBI.
So the RBI is keeping a close watch on how banks expand and diversify their operations, ensuring that they don't stray too far from their core banking activities or engage in risky ventures that could jeopardize their financial stability.
It's all about maintaining that balance between growth and stability, isn't it?
Exactly. And another key aspect of maintaining stability is the requirement for banks to maintain a reserve fund.
That sounds intriguing. What is a reserve fund and why is it so important?
Essentially, it's like a mandatory savings account for the bank. They're required to transfer at least 20% of their annual profits to this fund.
So it's a safety net, a cushion against potential financial shocks.
Precisely. It ensures that banks are building a financial buffer to withstand unforeseen circumstances. And if they need to dip into that reserve fund, they have to report it to the RBI and provide a justification for its use.
That's a pretty robust system. It shows how committed the RBI is to maintaining the financial health of the banking sector.
It does, and it highlights how the Act blends regulatory oversight with prudential measures to create a resilient financial system.
This deep dive has been incredibly enlightening. I'm starting to see how the Banking Regulation Act and the RBI's powers intersect to shape the Indian financial landscape.
It's fascinating, isn't it, how these legal frameworks influence the day-to-day operations of banks and ultimately impact the lives of millions of people.
And as we move into the final part of our discussion, I'm eager to explore how these powers and regulations are evolving in light of new challenges and opportunities in the financial sector.
That's an excellent point. The financial world is constantly changing, and the RBI's role must adapt accordingly. We'll delve into those evolving dynamics in the next part of our deep dive, so stay tuned.
We've explored the RBI's powers in depth, from licensing and supervision to setting capital requirements and controlling advances.
Yeah.
But how does this all tie into the bigger picture of financial inclusion and economic development?
That's where it gets really interesting. The RBI's mandate goes beyond mere regulation. They're tasked with promoting financial stability and growth in a way that benefits the entire country.
So it's about striking a balance between controlling risk and encouraging economic development.
Think of it like this. The RBI's powers are tools to build a financial system that is both robust and inclusive, ultimately contributing to the overall well-being of the Indian economy.
I'm starting to appreciate how deeply intertwined the RBI's work is with the economic fabric of our nation.
It's crucial to understand that the RBI's actions have ripple effects throughout the economy.
Oh, yeah.
Take, for instance, their role in managing inflation. By controlling the money supply, the RBI can influence interest rates, which in turn affect borrowing costs for businesses and individuals. This has a direct impact on investment consumption and overall economic activity.
So the RBI is constantly making decisions that impact everyone, even if we don't always see the direct connection.
Absolutely. Another fascinating aspect of the RBI's role is its focus on financial inclusion.
Okay.
They've been actively promoting initiatives to bring banking services to underserved populations, particularly in rural areas. This includes encouraging the establishment of rural branches, promoting financial literacy programs, and supporting the development of innovative financial products tailored to the needs of these communities.
It sounds like the RBI is really trying to make the financial system work for everyone, not just a select few.
That's the goal. A more inclusive financial system means more people have access to credit savings and other essential financial services, which can empower them to improve their lives and contribute to economic growth.
This has been an incredibly insightful journey through the powers and functions of the Reserve Bank of India. We've seen how it evolved from the challenges of the past, how it wields its authority through the Banking Regulation Act, and how it shapes the financial landscape of India.
It's truly a fascinating institution playing a pivotal role in India's economic development. As you continue your legal studies, keep in mind that the RBI's actions are constantly being scrutinized, debated, and challenged in legal and policy circles. Understanding the legal framework governing the RBI and its impact on various stakeholders is essential for any aspiring lawyer in India.
It sounds like we've only just begun to explore the complexities of this topic. Thanks for joining us for another Lex Talks deep dive. Hit subscribe to stay updated on the fascinating world of Indian law.